Hey, it's Louis from Trading Spartans, and today we are doing something special, right? We are going to show you a gold trend riding trading strategy which we utilize for intraday trade. So we will be using the MACD indicator and EMAs to ride trends. Are you ready? Let's go. Right, so this is it, right? The gold trending strategy using MACD and EMAs. So for this specific strategy, right, it's only for gold, right? So if you were to use it on other currency pairs, it might not be as accurate. And we only utilize two indicators, right? The MACD and the EMAs. So EMAs is essentially the exponential moving average, and we will trade according to the trend of the market. So how do you know the trend of the market? Usually we will take a zoom out approach, right? Go to the larger time frame, and from there it will be very easy to see the trend of the market. Or if you want, you can use your EMAs or even moving averages, maybe the 20, 50, or 100, depending on your time frame. And from there you will be able to see the trend. Right, so of course, if the market is choppy, whereby it's ranging, then of course we will not be utilizing this strategy. The time period to trade will be during the European session and the US session, and time frames will be on the 15-minute, 30-minute, and H1 time frame. So usually on the lower time frames. Okay, so this is the setup for a long trade. So we'll input the EMA 9 and EMA 20, and also the MACD. Okay, so MACD, the settings is over there, right? 526 9. So basically, that is the default settings. I think the default setting is 926 9, right? So essentially, we're changing it to 5 instead of 9. And for the trigger for us to buy, so basically, what is the condition fulfilled for us to buy is when the EMA 9 crosses above the EMA 20, and at the same time, the MACD turns from negative to positive. So later on the chart, I will show you guys. Okay, and the stop loss will be below the bottom of the previous two candles, and will only take profit when the two EMAs 9 and 20 cross each other again, right? So basically, we'll be trying to ride out all the way until the market reverse, or when EMA 9 crosses below EMA 20. Okay, so this is one example of a long entry, right? So this is a gold chart or the M15. As you can see, the EMA 9 and 20 have crossed each other. Okay, so maybe a bit hard to see that it crosses above, but actually it crosses above, right? The entry price is over here. Basically, once it crosses, we will enter. Stop loss will be two candles below, as you can see over here. And if you look at the MACD, MACD have turned positive, right? So the MACD, when it's below the line, right, the MACD histogram, when it's below, is negative. When it's above, it's positive. So as you can see here, right, the EMA 9, which is the red line, actually crosses above EMA 20, which is the black line. And that's our entry. And we only take profit when the two EMAs crosses each other again, which is seen over here. All right, so essentially we are trying to ride out as much profit as possible until the trade reversed, which happened. All right, so that is for the long trade. So next we have the short trade. Right, so we'll input our EMA 9, EMA 20, and MACD similarly. And for the condition to be fulfilled, right, EMA 9 must cross below EMA 20, and the MACD must turn from positive to negative, right? And stop loss is essentially the opposite, right? Our stop loss will be above the top of the previous two candle, and we'll take the profit when the two EMAs 9 and 20 crosses each other again. Okay, so basically when EMA 9 crosses above EMA 20 again. So let's look at the gold chart, H1 gold chart. So as you can see, the EMAs have crossed each other, and then we are turning negative, right, for our MACD. Okay, and then what happened, right? Well, we can see that when the two EMAs crosses each other again, then that is where we will take our profits. So of course, if you look at the EMA previously, right, it has been crossing each other pretty much, right, because that is during a ranging market. So for this strategy, it's not as straightforward as just utilizing your EMAs and MACD. You still need to input some of your basic trading knowledge such as support resistance. If you can read a candlestick pattern, that would be even better, right? So this is just a very, very basic or structured strategy that you can use to long or short gold, right? Basically to ride the trend of gold. So it is important to know that you still need to have some basic knowledge or support resistance, which will help improve the accuracy of your entry or your trade. Okay, so if you like what you learned so far, right, please hit the like or subscribe button. And if you want to learn how to make your first profitable trade, click on the link in the description to join our Trading Spartans challenge, and you will receive short lessons every day to bring you from zero to your first profitable trade in 10 days. Right, so thank you for watching, and we'll see you again. Bye-bye.